So I'm really pleased to be able to offer ASP to support both Tamsin and Charlie Peverell from Wilson in creating these lead-in events. This is the third, I think now, up to Content Rising, which they're running in Kew in June. So there'll be more information on that. So we're very pleased to be supporting that. And I'll now hand over to Tamsin to introduce herself.
Well, I would like to invite Louisa to introduce herself first, if that's okay, because Louisa is from our amazing financial supporter, Naturesave. And yeah, I'd love her to just say a little bit more about that.
Hi, thanks Tamsin and Gwyn. I'm Louisa. I'm from the Naturesave Trust, and we are fully funded by Naturesave Insurance. The Naturesave Trust gives out around £100,000 every year to environmental and conservation projects around the UK. We're open for 3 funding windows a year, and the next one's about to open this week. And yeah, we're proud to be part of Content Rising by giving a donation to the event to make it happen. So thank you. And Tamsin.
Great, thank you, Louisa. So I won't say too much because you may well have heard from me or Charlie in the past about Content Rising, but in case you haven't, it's an inspiring day of talks and workshops from people such as those you can see on your screen right now. It's at the Kew Wakehurst Gardens in Sussex, which they call their Wild Botanic Garden, the wilder sister of Kew in London. And yeah, it's 12th of June, and we'd love to see you there. But without more ado, I would love to introduce, first of all, our first speaker, Ed Grattan from Triodos Bank, who we've invited along with James Holt from Naturesave Insurance to get into this subject matter of financing the future, and yeah, just getting under the bonnet a bit more of the role that finance may or may not play in a better future for us all. So yeah, over to you, Ed, and thank you so much for being with us today.
Thanks, Tamsin. Hi, good afternoon, everyone. Nice to see you all. So yeah, I'm going to talk to you just for 10, 15 minutes or so, I think. Set a bit of scene from Triodos for this discussion. My background, just briefly, I'm a corporate communications and PR person by background, about 20 years in the sector, and worked in agencies for a long time, and then ended up at Greenhouse Communications, which is a wonderful PR agency, worked closely with Content Rising. And from there, one of the clients was Triodos Bank, and I was aware of Triodos from an eco-activist uncle who was always telling me I should bank with Triodos because of my passion for the environment. And so it was a pleasure to start working on that account when I was at Greenhouse. The new CEO had just come in. They just launched a current account in the UK, and then I came in-house to Triodos about 7 years ago to run the PR and communications side of things here out of the Bristol head office. I think quite a few of you might be aware of Triodos already, hopefully. I'll just give you a 1-minute headline. The bank is Dutch originally. It started in the Netherlands 45 years ago this year, always with a focus on creating a bank that could lend and invest money for positive impact. So that was really from the core. There was, I think at the time the Chernobyl disaster had happened, there was a real reaction to that. Climate change in those days wasn't really so much of a discussion point, but we then ended up financing the very early days of wind power off the back of the Chernobyl disaster in the Netherlands. And the bank has grown steadily over that time into 5 European countries. It came into the UK 30 years ago this year, so we're celebrating our 30th birthday this year, very excitingly. And yeah, it's a retail bank, so we hold people's money essentially as savings or a current account, and then we very proactively lend that into environmental, social, or cultural projects and organisations that we feel are making the world a better place. We also have an investment bank from the Netherlands that runs stocks and shares funds, so we're playing in that sort of impact investment, ESG sort of space, where we see a big role for a sustainable focus and the kind of stock market side of things. But the main thing is about, certainly in the UK, we're a retail bank, and we have that commitment to lend and save for positive impact, and also with very strong minimum standards as well. But it's the lending for positive impact that probably makes us pretty different and unique in the banking space. We've about 100,000 customers in the UK now. We'd love to grow a little bit more, but we're also not about being the next fintech bank with 1 million customers. It's also about not only the kind of finance we can do, but the message we send to the rest of the finance industry. So one of our strap lines is financing change, changing finance. So quite useful, hopefully, for the debate today. Obviously, in that attempt to sort of grow our customer numbers a bit, it's about a lot of that's about building our brand, because certainly in the banking space, it's a very brand-led sector. People want to bank with a name that they're familiar with, which is why I guess we have high street banks with banks on the high street that people can see. We've always been an online, or I guess a paper bank before. We've never had branches. So that's a little bit more challenging, although obviously a big cost saving in that. And in terms of building the brand, we currently have about 2-3% brand awareness, I think, in the general public here in the UK. So thankfully, in our target market of conscious consumers and environmental shoppers or bankers, indeed, banking consumers, it's more like 20-25% of people that know us, thankfully. But we do know we need to grow that brand. So on that note, in today's an interesting day, actually, because I sit within an integrated marketing team in the head office here in Bristol, and the marketing side of the team has launched a new TV ad, which is going out on Channel 4 and other places, and I'd love to show that all to you today. So I think Tamsin is going to line it up. It's only 30 seconds long, so have a watch.
Great, I'll get that on screens.
The money in your bank changes the world, for better or for worse. Because what your bank does with your money decides our future. Triodos Bank uses your money to help make a positive impact on people and planet. We believe it's not enough to avoid funding harmful practices, so we actively support those building a better tomorrow in renewable energy, healthcare, nature restoration, and more. Triodos Bank. Move your money and make a difference today. Search Triodos Bank. The money.
Thanks, Tamsin. So that's actually a creation of the agency Rubber Republic here in Bristol as well. And Matt Golding is the amazing director of that small company, and they are speaking at Content Rising. So he's worth checking out if you're going. Yeah, you see the kind of core message we're trying to get through there. Where you bank really does matter, and that's because we're trying to remind people actually that money doesn't just sit there in banks. It has an impact when it's lent out the other side, I guess. So it can be a very active choice. Banking, not only banking savings, your investments, if you have any, your pension, of course, which is made up of investments. Yeah, I guess that's kind of coming to people's attention a little bit more. It's been helped by some quite high profile campaigning from NGOs. The big one being Make My Money Matter recently, who've had some amazing films. If you haven't already seen those, then give them a search, because they used high profile actors to, in a very compelling way, remind people of the impact that banks have. And I guess it's our hope that more people will think about banking alongside other conscious choices, whether that's their diet or the way they travel, things like that. Actually, it should be very high up there. And Make My Money Matter, in an attempt to address that, did do some interesting research that showed that, they were talking about pensions initially a lot, but a moving of your pension to a green pension was 21 times more powerful than where you ate or where you traveled, kind of all combined. And that really landed quite well. A lot of people started talking about it. The other thing that's been quite interesting recently is an organization called My Mother Tree. They have a website that is looking a lot at banking and finance. And they looked at where £1,000 sitting in someone's account in different banks, the carbon footprint of that £1,000. And they identified that with the most polluting banks, I guess you're looking at kind of the equivalent of flights to Rome and back. But whereas with Triodos, you've got practically no impact from that. And the reason they can start doing that is because thankfully banks are now having to disclose their I guess, scope 3 carbon footprint. So it's the carbon impact they have from the lending that they do. And the important thing to remember is, I think, that banks are some of them are making quite a lot of noise about the green investments they're making, but that, I guess, could be called greenwashing, really, unless they're reducing the brown lending that they're doing, i.e. the significant amounts into fossil fuel expansion that thankfully certain campaign groups are bringing to light, but still don't seem to be quite enough to really make people move their bank, frankly, because moving your bank is not something that people do very lightly, or kind of seem to want to do. But nowadays it's a lot easier than people think. You can open bank accounts very quickly now. We are mobile first at Triodos. We've moved to that area because that seems to be the future for banking. So you can open an account really quite quickly now. I guess coming up to time a little bit in terms of what I wanted to say, how do you find out how your bank's doing, I think, is also something that's helped us recently. Is various organisation comparison sites, ranking tables and things do look in quite a lot of detail at some of the kind of more boring side of things, trawling through other banks' annual reports to see how they're doing. The best I'd recommend is Ethical Consumer, great magazine, really thorough research team who look in detail at all the banks. They've just recently, in the most recent edition, done their full banking analysis. Pleased to say Triodos came out top again, and it's really interesting to see how the others are doing. But in terms of shouting about that, it's a pretty clear indication that how your bank is probably doing, is to look at that. And then, I'd also look to Which now, who thankfully are rating banks. The eco providers label they've come up with is very thorough. That's us and Co-op Bank are the only two banks in the UK that have that for current accounts. There's a few others. There's bank.green as well, thankfully, are now referring people in a kind of easy, simple way to the greener banking options. The other thing that Ethical Consumer do is look at ownership models. I know in the subject of this webinar, we were also talking about some of those broader themes, donut economics, green growth, things like that. And I think the kind of the growth incentive that comes with various different ownership models is what we will look in at quite a lot of detail. Triodos is protected by a charitable foundation in the Netherlands in terms of its ownership, and we have shareholders across Europe that buy a share. It's called a depository receipt in Triodos, and they get dividend payments and can vote at our AGM and things. But we are protected by that charitable foundation in terms of aggressive takeovers. It's fair to say that at Triodos there is a very strong people, planet, profit, three bottom line structure. But in terms of people and planet coming before profit, we're B Corp certified. We're quite supportive of that, all its up and downs. But what's impressive about that is that you have it in your articles of association that you are focusing on people and planet ahead of profit. We're very supportive of alternative thinking. So we were the first bank to publicly support post-growth theory. Some people call it degrowth. Essentially kind of calling out the elephant in the room with a lot of big issues that we're facing in the world right now. And I'd also just mention that in terms of nature restoration, we're doing a lot in, I know natural capital was mentioned in the title as well, in the blurb for this session. We do see a huge role of nature-based investments in terms of addressing some of the issues that we're facing as well. That's been a bit of a rattle through Triodos. Hopefully that's been a bit of a kind of thought starter on a few different areas. All I can say just to finish up is we're on all social channels. We've got a great monthly newsletter, if you're not already a customer, it'd be great to have you.
Thanks so much, Ed. And we will make sure we have some space for questions, lots and lots in that you just shared with us. I'm sure people have got plenty to ask about. So without further ado, though, we'll just move over to invite James from Naturesave Insurance to introduce us to how insurance can play a part in all of this as well. Over to you, James.
Thanks, Tamsin, and thanks, Ed, as well. Ed probably find the same thing. There's so much to talk about in this space. I'll try and keep it on point and not too niche, but we can, I suppose, discuss those points a bit sort of further down when we sort of get the sort of discussion phase of things. So I have got, I think it's like 13 years now of experience in insurance. I started off on personal lines, which is just consumer-led insurance, so household, buildings and contents insurance. As my wife Louisa will probably attest to, it's a really stressful industry, and ended up leaving and moving to Devon and having to find a new job. So what am I going to do? Start looking around. I thought, I don't really fancy going back into insurance, but I saw an advert for Naturesave. I thought, that's interesting. How does that work? So I applied, got the job. 7 years later, I'm still here. And absolutely loving it, and it's much better for my mental health working for an organisation that has an ethical stance and is trying to do something with an altruistic kind of angle, I should put it. So that's a bit of a brief background about me. Naturesave has been going since the mid-90s. It was set up as I suppose an insurance version of the Body Shop, I think the founder put it. So somewhere where people could go and buy their insurance in an ethical manner, which to this day is still very hard and very complicated. So I deal with mainly commercial insurance, and we've got obviously household clients as well. So we do buildings, contents, and in commercial we do all different types of insurance you can possibly get in the market, other than pet insurance and I think wedding insurance. So we do pretty much every insurance you could want to have. And it's navigating that space of trying to find clients a product that is ethical is almost impossible a lot of the time, because I'm sure like Ed will know, and maybe a lot of you already know, the insurance providers out there at the moment are only recently making sort of changes in the direction we want them to ensure that we're not doing more damage to the planet. Working with insurers that are making a change. I mean, the top ones at the moment, you'd say the likes of Aviva. I think they recently divested in 2023 more fossil fuels. I think 2.5 billion worth of investments were taken out of fossil fuels. And and there are others on that list, but it's much of a muchness. So what Naturesave has, and like Louisa works for, is the trust. So I think it's on average about 10% of premiums go to the trust, which then funds various projects throughout the years, usually 3 windows a year. And funding, I think, ranges up to, I think, usually net about 80 to 100,000 pounds a year's worth of the profit goes to the trust, depending on how well I do the year before on new business sales. So those projects are then obviously a direct result of our clients' funding. So if you buy a policy from Naturesave, there's a direct correlation and link to where your money goes into projects that are good for the planet, obviously good for projects that are in the UK as well. So it's all UK based giving at the same time. It's in terms of this space, we get a lot of questions from clients about, is my insurance ethical? Okay, this is the big question. And you probably all know this already, but there is no one insurer selling a product out there at the moment that is marketed as ethical. And there are probably a lot of reasons for that. Historically, it's mainly been because they just don't care. And more recently, it's probably because they're still a bit worried about the greenwashing aspect. There's a lot of obviously legislation and laws around, obviously, if you put it out there that you're selling an ethical product, it's going to be scrutinized. And if when the push comes to shove, a lot of the time these products aren't going to stand up. It's probably the guidelines and the rigorous testing they would go through to be classed as ethical. So that is a difficult thing for us to try and sometimes explain to customers and consumers that come through to us. And we try to sort of frame it in a way that says, look, it's a really hard space to navigate. If we start going to things like Lloyd's of London and reinsurance, insurers have a way of making the waters very muddy. So even if you are buying an insurance product from an ethical provider, they still might have that product being reinsured by someone on the Lloyd's market who's not particularly ethical. So the money always ends up somewhere quite dirty. We do try and focus on environmental. We've always been angled as an ethical insurance provider, and especially with the conflicts around the globe at the moment, that's quite difficult. Again, we do get clients, and we do listen to you, but we do try and focus on environmental things as opposed to overall ethics. Just because we're fighting so many battles as it is, throwing extra things, and on top of that, sometimes just makes almost nigh impossible to get anywhere. But we do listen, and we will try and provide clients again with a product that meets their needs from an ethical point of view. In terms of the wider picture of Naturesave, we were recently acquired by the Benefat Group. The Benefat Group, again, I think it adds something quite positive to what Naturesave is doing, in that they are a non-staker owned organisation. So all available profits go to a charity, basically. They've got specific giving arms. So you've got the Movement for Good, which donates about £1 million worth of its profits to just general not-for-profit organisations. So that's very similar in sort of a sense to Naturesave. So again, even more of your profits and more the profits from the insurance and things go towards good causes again, and are not sort of lining the pockets of people who are just there to make a quick buck and make profit. In terms of investments, so again, how insurance providers and insurance companies make their money is not by just banking your money, and at the end of the year you take away what was paid out in claims, and what you're left with is your profit. They are investing your money straight into investments projects. So it could be offshore oil exploration, it could be coal mines, all these things that your money is sitting there doing, it is going into things that are going to make them a lot of money. Again, having the likes of Aviva come away and say, well, we're not going to do that anymore, is a really powerful thing. And we're just trying to enhance that voice really and put extra pressure on those insurance providers. And we have been doing it for 30 years, but we're only a small broker, based in South Devon. So there's only so much we can do. But since we were sort of taken over by Benefact, we've been listened to an awful lot more. They've treated us with a lot of respect, and they've really helped us at the table with a lot of these larger insurers, and actually quite keen on talking to us and sort of hearing about what we're doing, what we've been doing to sort of try and push that sort of agenda about, we need to focus on where your money's going. And clients just don't really know that. Like the banking, like Ed probably said, the banking industry's probably got more of a spotlight on it. than insurance. But insurance, if you look at overall investments in insurance, I think it's like the the insurance industry is the second largest investor in fossil fuels in the world. So, and I'm probably sure number one is probably banking. So where all the money is going, it's all going to fossil fuels. And I think you're talking about something like 2.5 or 4 trillion a year worth of investments in total in the globe go towards fossil fuels and fossil fuel exploration. So there's still a huge amount of work to be done. But obviously, if you sort of look to go join places like Naturesave or Triodos Bank, you're making that step towards making your finance more ethical and knowing where your money's going and going somewhere it's transparent. So we hold our hands up when we talk about, there aren't any ethical insurance products out there. People get a bit disheartened, but you're still offsetting what you might have gone and bought out there in the first place by being with someone like Triodos or being someone like Naturesave. You still know where your money's going, and you know that there are people out there trying to make a difference. So that's kind of Naturesave in a nutshell. And that's it in a really as concise as it could be manner. And in terms of sort of things you can do and take away and make change yourself as a consumer, ask if you're going through brokers, ask your broker what their position is. Ask them, are you asking the insurance companies that you're working with the difficult questions around where the money's being invested? You can also go onto social media, and if you signed up with a bank recently or with an insurance provider, you can ask them the tough questions. Are you currently aligned with the Paris Agreement? What is your net zero target? And just ask them the difficult questions. They do listen. They have to. If they give any salt to to what their clients are saying, and what a lot of companies these days do, because they know obviously that social pressure is a big thing. So put more pressure on them in a visible manner. So doing on social media is one of those things you can do. And then just again switching to providers that align with your values. That's the one thing you can do. In effect, that's the least you can do. And if you're not doing that, then that's obviously your decision. And we get a lot of clients who sometimes, we're quite surprised. Also, we are approached by companies. You think, oh, this is going to be there's a dead cert here. They're aligned with our values, and they still go on price. So if you are making those sort of changes and you're having to pay more to do so, then all the more power to you, because that's a difficult decision, especially in these hard times at the moment. So and we understand that. But I think, you deserve to give yourself an extra pat on the back if you are making those difficult changes, even though it's hitting your pocket. So yeah, there you go. I'll wrap it up there, and looking forward to some questions from the panel.
Thank you, James. That's quite a lot of information for everyone to sort of process. That was really, really useful. Thank you very much. Does anybody have any questions for James or Ed? Tracy posted that charities often share benefit group links to ask people for their votes. So that's one way of local groups often share those links.
Yeah, the benefit group have a lot of, if you look from the charitable side of things, if you work for a charity or a not-for-profit organisation, following something like the benefit group and the Movement for Good is really good. Your own sort of followers, your staff, etc., can vote for you in funding rounds. So it's very much worth following those on socials, especially again where funding is quite hard to come by at the moment. We can actually invoke the power of your followers and your own organisation into sort of getting those funds. So it's definitely worth doing.
Miranda's got her hand up.
Hi, thank you. Very interesting from both of you. Thank you very much. I am a Triodos customer. Looking forward to one day you having a business account. I don't think we're quite there yet, but that would be exciting as well. I don't actually a question for both of you. Just in terms of the post-growth theory that you mentioned at Triodos, do you have a sort of short summary? I mean, I feel that the way livelihoods are going, thinking about the future, thinking about what young people, what to encourage young people towards the sort of livelihoods for a post-growth kind of world, and where that might be. So I wondered if you could give a little summary. And then for James, just in terms of the big picture with insurance, so often you can sort of see, is anybody kind of working on something a bit like the Task Force for Climate Related Disclosures, any kind of simple but big picture look at the insurance industry, because they have such a powerful role in just about everything, to make everything a kind of to include nature and to include the planet in every kind of insurance decision. Or maybe that's me just thinking too big. Anyway, that was a couple of thoughts.
Did you want to go first, or do you want me to go
Yes,
first?
sounds good. Thanks, Miranda. Yeah, to pick up, but briefly just to mention, business accounts from Triodos, are currently closed and have been for a couple of years. We're working on that in the background. It's going to take us a while to come up with something. We want it to be a decent product offering, and it's quite a bit of development. So we'll keep everyone updated on when they come, but they will come back at some point. And so post growth, this was really interesting. We're lucky enough to have a chief economist in the Netherlands called Hans Stegman, who is a pretty inspirational thought leader on many different areas, but he has been particularly strong on post growth. And he has a kind of huge LinkedIn following and posts regularly, and writes a lot profusely actually on Substack on the topic. It's complicated. It's very easily misunderstood. So I guess from a communications perspective, that's a fascinating challenge. It's also highly political and been very politicized, given the focus on growth here in the UK from the Labour government, for example. Lots of our team were very much questioning us coming out with these sort of messages about what we believe in here. So we had to make it super clear. I think the point is, it doesn't mean everything stops growing is one start. Some things do keep growing, but a lot of things stop growing. And then in the background, in terms of selling it, certainly I guess to younger people, they quite quickly get the kind of overconsumption side of things. They get the like fast fashion. We've got too much stuff. We like, this is surprising considering how pulled in, I guess, they all are by the fast fashion industry, and by consumerism as a sort of as an instant satisfying kind of thing. A lot of them, I think, are actually understanding that that's not right, and that it's not sustainable. And it's fairly easy to see that. It's just common sense, really, isn't it? That we're just consuming more than the planet has to give. So, essentially, kind of hammering that home. I'll share a blog post with our chief economist who does explain it quite simply. We've done some Q&As, and he spoke at the Ethical Consumer Conference in London last November, December time, and they focused their whole conference on the topic. There's lots of obviously like reading and books that can be shared in the space. So we kind of shout about those where we can. That's probably all I'd say on that for now. It will be very interesting. I hope it's also a kind of thing around tipping points we're talking about a lot recently, where if some of these ideas can, even if they start off quite small, if they can start to get into the mainstream a little bit, one way that is becoming into the mainstream is maybe to frame it more about well-being economics, which has died down a little bit recently, unfortunately, but we have heard, for example, Scotland and Nicola Sturgeon was pushing it quite hard. New Zealand, other kind of more progressive nations are really considering alternatives to GDP measurement. It's all linked, and really like that's what Triodos is about. So we've sponsored various things in the background, done various bits of advocacy to the folks that are sort of working in that area. Over to you, James.
Thanks. I suppose there's three questions there, isn't there, almost? I'll sort of touch on the one with the post-growth rate. It's I don't know a huge amount about that in terms of how it would impact the overall sort of Naturesave overall group, but I suppose you could look at the way the Benefact group operate in terms of the profits go back into into sort of going back into society through charitable organisations. So there's a circular economy impact that has. There is still, unfortunately, I say unfortunately, I mean, how do you sort of escape the wants of a company that has a drive to sort of want to sort of move on and get larger without having to increase its income and be, I suppose, almost slightly aggressive about that, because you have to exist in around other companies who are doing exactly this, who are doing still using the old economic models. So you have to sort of, I suppose, they have to be mindful of that they don't get swallowed up and disappear. But at the same time, I think given the way they're structured and the way we're part of that, I think that's a really positive thing. Working for a huge organisation that's given over £250 million away of its own profits since 2014 to sort of, back to the people, I should say. The question was overall arching organisations that look at insurance and how it conducts itself in terms of moving it forward from a fossil fuel perspective. There are a few. I think with the UK, I'm pretty sure we've insured them. I should know this, but then we've got quite a few clients. So Share Action, I want to look at from a UK perspective, and also you've got Insure Our Future. So that they're a coalition of NGOs and civil society groups, and they do like scorecards and insurance. So if you look up, it's going to be very similar to Ethical Consumer, where they'll do like a rating based on a number of factors, but they will be specifically about environmental factors, and not so much, I suppose, about what maybe the directors are being paid, etc., which Ethical Consumer also factor into their scoring. So they're worth looking at. You've got the UN Convent Net Zero Insurance Alliance, the NZIA. So there's quite a few out there that do look at things from a holistic perspective. But again, they're not hugely sort of popular because not everybody knows about it. It's going to be a lot of people like Gwyn, for example, and climate professionals who will look into these things particularly, but not so much the consumer. So, but you do. I think again, I've seen definitely in the last. I've been there for 7 years, and the last 3 years, our clients are becoming a lot more savvy, and they're asking really difficult, but also at the same time challenging and engaging questions that for us to ask and go back and speak to insurers about, and that make us think as well at the same time. And we get called out sometimes as well that we don't know. We try to know as much as possible. We don't know everything. So, that's, I suppose, my answer to your questions, Miranda. Did that answer them? Well enough? Yeah, great. Thanks.
So we've got a couple of things in the chat here. So Dean Spears from Sussex Bay has introduced that project, which I'm slightly biased towards hearing more about because that's my part of the world. So it'd be great to make space to just hear Dean's perspective around the language of how we engage investment for these issues. But Simon did ask a question first. So Simon, would you like to just put your question to Ed and James?
Hi, yeah, I'm just interested both from a banking and a finance perspective and insurance, what the relative or respective organisations are looking at in terms of systemic risk assessments. In my head, if you're looking at some of the collapse scenarios that might play out based on the changes that are happening both climate and globally from an instability perspective, I'd imagine that the insurance industry is one of the first ones that's going to get hit, followed very quickly by the finance sector, and that there will be a forced decoupling between finance and kind of the growth in terms of our hard limits. Just wonder what either organisations are kind of looking at in terms of, and actually talking like 3-5 years, maybe not more than 10.
I'll go first if you like, James. I mean, great question, Simon. What's interesting, of course, is that banking, and I don't know so much about insurance, but I think it's the same. The whole so much of it is based around risk modeling anyway, and has been. It's highly regulated sectors now, particularly after 2008. Probably could be more regulated, we would argue, for various things, including on climate, because there's huge risk teams in these companies. We have a huge risk team here, and climate risk is now an area that needs to be focused on more and more, sadly, because there's huge. I think it even was Mark Carney, of course, now who's running Canada. He wrote about the tragedy of the horizons, and also the kind of, he was shouting quite loudly back then. This is a while ago. We're talking 10 plus years ago about the stranded assets of that all these banks and the finance industry has in the fossil fuel sector, being a huge risk to all collapse and fall down all at once. So they're busy doing it, I think. So we will, of course, have to and are applying all of the necessary regulatory risk requirements now, which is actually a big burden on a relatively small bank like us to undertake. So you have a funny mix of kind of with this regulation of kind of making it, what you want to do is regulate so that their sustainability leaders can not feel loads of pressure to report on climate versus the ones that are not having to report on all of the fossil fuels that they're financing, if you see what I mean. But it's a very hot topic in these discussions in the various kind of advocacy groups and things in the City of London. They talk, I guess my personal view is there's a lot of good talk in this area. I think it needs to be more than just them doing it because of risk. I think they need to do it because there is a moral responsibility to do it now. And if you wait until the risks are actually showing, it's kind of too late. So our argument would be from Triodos always is that actually get on and start moving the money now, not when your risk team is telling you to move the money.
James, did you have anything you wanted to say on that?
Yeah, I can do. Yeah, absolutely. Yeah. I mean, I touched on it in my sort of opening bit about Aviva divesting from fossil fuels completely. Again, know how much that is due to social pressures or the fact that they should have done it because that's the right thing to do. We again, part of Naturesave's message has always been, divestment from fossil fuels, and insurers paying out on losses which can be pretty much directly attributed to climate change. We know the natural disasters have been a thing for a while, but obviously there's been a huge increase in them in the last sort of 20 or 30 years. And the left hand has not been sort of communicating with the right hand at all. We have a binder with AXA for years, and we saw huge increases in premiums all of a sudden after I think there's some quite sort of catastrophic sort of hurricanes or in the Caribbean, and they were paying out to pay out billions in claims basically, which directly impacted Naturesave, which directly impacted our customers, and saw their premiums go up 5% a year since the last 5 years, and they've continued to do that. Again, and then you have obviously that knock-on effect on your premiums go up. But again, I suppose on the flip side of things, you also there'll be clients out there, especially home insurance clients, who can't get flood cover anymore, or if you're in California, you can't get cover at all probably. So this direct impact of their investments has come home to roost, not just with them, but now impacting customers. And I think if people were to be able to join up the dots without burying their head in the ground, they'd soon make these decisions a lot quicker. So Simon, that's just absolutely. I think the insurers have been guilty of this for too long now, and they're moving away from it. But again, I just hope it's for the right reasons, not just because the back pockets and the money side of things is talking. But yeah.
It would be great to connect this up with and I see your hand, Gwyn. Sorry, I just wanted to pick up. If I know Dean has had to drop out of the call, but just interested to connect this up with the sort of question about how we communicate all of this. And obviously, we saw your video at the start, Ed, And we know that's been made by Matt Golding, who some of the people on this call will have been on the call that he hosted in the autumn, where he was trying out different messaging approaches, and this balance between the kind of communicating that what you've just very clearly communicated, James, about, you know, there's this direct impact on our pockets and our lives, versus the kind of more positive and what we've got to win and gain. And I'd just be interested to hear, how you're kind of managing that balance. It's not an easy question to answer, but yeah, interested to hear more.
I think personally, a lot of it comes from, sorry to jump in, but particularly for Naturesave, the trust and the work that we're doing through that really helps to kind of communicate in a way, in a really positive way, that actually there are things that you can do, and there are lots of amazing, hopeful, positive things happening around the country. So although it is a case of explaining that this fossil fuel crisis is causing a lot of the problems that we're facing, it's also really helpful to have the trust, because it enables particularly people who are working in the sales side, like James, to communicate in a way that's more positive, and it gives him things to sort of discuss that's not so depressing. But focusing on like things like community and the community group projects that are happening everywhere is really important, I think. Sorry to jump in there.
Yeah, there's communications is the hardest part of the job. Sometimes the problem is overload, and people get fatigued, I think, with with what's going on. So I suppose it's just, you got to keep it simple. You've got to say, well done, you're doing the right thing, and keep doing it. And like Louisa said, it's, there's a lot going on at grassroots level. People are really trying, volunteering their free time when they don't have to. And I think the problem, especially in the UK, I think people are quite belligerent, aren't they? I think they're told one thing and they just won't have it until it directly impacts them. And I think that's the message you want to be able to get through to someone, is them to have that kind of experience of being directly impacted. And not, it's got to hit home. It's got to hit close to home for them to really sometimes listen. And we're talking about the fringe, people, not just in the fringe, but the people who are just, you might never change their minds, but how do we change their minds? How do we get them thinking about it? And sometimes I think the concern is that, you can say whatever you want, they're just not going to listen. So there has to, I think, some people will get it, some people won't. I think the messaging, I think everyone's messages is perfectly is on the right path. I just think power in numbers, more people need to keep doing it, and I think slowly we are seeing more of that. So yeah, I think it's just clear messaging, not getting too sort of downtrodden by it all, and there are, hold on to the glimmers of hope that there are.
Thanks, James. I think Gwyn's had his hand up for a while now.
Yeah, thanks. It's been fascinating. Thanks for all the speakers. This is really a question for Ed. ASP is full of people who have actively decided not to work in conventional business. They've either been there, tasted it and didn't like it, or they've never got into it in the first place because they fundamentally don't want to work for and support a system that's actually an existential threat to future generations. And so they've had a quandary of, what do they do? How do they manifest their business? A lot of them are B Corps. A lot of them are working with people like ORB. A lot of them setting up social enterprises. They're trying desperately to get out of the way of thinking that business is only a means for making money and creating wealth for a few. Sadly, there's practically no one in the finance sector that actually wants these people to, really actively exist, and to support them in ways that are actually aligned. And we've got several examples where members' projects and businesses have actually been destroyed by the people that finance them because they give them no leeway all they're worried about is the financial return, and they're not in any way interested or aligned with the purpose of the business that's being set up. So there's a big demand now arising for what we call aligned financing, where people with money are saying, we want your companies to succeed and we will share in the profit by funding. So it's not looking for handouts or charity, but it's trying to accept that if we're going to achieve the goals we want, then the whole business mechanism has to shift to a different set of principles, where earning a profit is the outcome rather than the purpose. And I just wonder how far companies like like Triodos, etc., can actually deviate from the normal financial conditions to actively support purpose-led organizations and give them more leeway, more support in actually trying to achieve the purpose rather than just return a profit.
Yeah, thanks, Gwyn. I guess what doesn't help is that it's been pretty challenging kind of broader economic environment, hasn't it, for the last few years for all businesses, not thanks to certain moves from the government and that sort of thing. I guess speaking from Triodos' perspective, I would hope that we are financing some of your members and others and helping them. We have a team of almost 100 relationship managers in our business banking side that do talk to customers and get to know them well. We pride ourselves on that sort of relationships-based banking. Also, because a lot of the time the loan will be based on the purpose and the impact of the organization. So that really is key to what we do. There's a reality to the fact that we have to lend based on being repaid, because otherwise we wouldn't be sustainable, and certainly wouldn't. As a highly regulated space in banking, you need to show that you are giving credit where it can be repaid. So often there might need to be collateral that's given, which is a standard process with bank loans, or you do need to see solid business plans. And as much as that might sound like it's not about the purpose, it still is. Like, we want those organizations to succeed, so we will be asking for their business plans and going quite rigorously through those. We tend our lending tends to be in the kind of medium range size, so we don't really do very small loans. It's normally kind of 50, 100 plus through to maybe up to 20 million. So we don't do very big loans, and we don't do smaller end of things. An interesting side is that we do have a crowdfunding platform. So certain organizations have chosen to raise money in that way. If their particular business model doesn't suit traditional bank loan money, then we can offer them the option of trying to raise it from the crowd. But even those, you have to go through a huge amount of due diligence, because they're risky investments for people, and we make that very clear on the crowdfunding platform. But we ideally want those businesses to succeed and be able to pay that money back as well to those individuals that will have put their own money in into our crowdfunding platform. So yeah, I hope there's a kind of balance there to be found. It is unfortunate that we can't fund everyone, but we are a purpose impact-led bank with ethics at its heart. So we try to help as many as we can. But if the sort of conditions are there. And I would just say, like, where businesses have got into trouble, I'd like to think that we do give people a chance. We give them extra time. We through COVID, for example, we were pausing interest payments on our loans to allow people a chance to catch up. I think, but there has to always be a certain point where if the business is going to fail, it has to fail. Like, there are examples where businesses do fail and have to default, unfortunately. We can't just be carrying on forever.
Yeah.
So I hope that answers the question.
Yeah, that does it, because the last thing we want is to sort of support failing businesses until they really do collapse. So it's got to be realism there. I'd just like to add that, you know, ASP's been a customer of Triodos for over 20 years now, and certainly in the early days when we were setting up, the difference, just the way we were addressed and handled by Triodos was just amazing. First name terms, instant responses, and so it was sort of although the laws of economics still apply, the way you applied them was totally different from any other bank. So
good to hear.
I just want to acknowledge that, and I hope that all our members, you know, would look to you in the first instance for support in some way. So thanks for all the great work over the last 20 years.
And that brings us to the end of our session. We're at 1 o'clock. So just want to say massive thanks to Ed and to James for coming and giving us, I know it was maybe felt fairly brief for you, but it felt quite, to an ignorant person like me, felt like a deep dive. I learnt a lot. And please do follow up with questions to Gwyn, anybody who's come who didn't get their chance to ask anything, ask what they wanted to, and we'll find a way to get your questions answered. And thanks very much, everybody. And thanks, Louisa, for helping me chair this session.
Everybody.
Thanks. Bye.
Thanks, everyone.
Thanks, everybody.